What's in a pair? Now that you know the basics of what Forex is, let's look at the different components of trading in a little more detail. The first thing that you need to understand is what you are looking at when you see a currency pair. When you look at a currency table or are deciding to trade a pair, you will see the symbols of the currencies available to trade. For example, if you're going to trade the euro versus the US dollar, you will see the currency pair symbols Euro USD. The first currency mentioned, which in this case is the euro, is called the base currency. And the second currency, which in this case is the US dollar, is called the counter currency. The most commonly traded pairs are called the majors, and these include Euro US dollar yen, Sterling US dollar Swiss franc, Aussie dollar US dollar, and US dollar Canadian dollar. You will note that the US dollar is always one of the currencies in a major pair. The majors make up approximately 85% of the Forex market and, as a result, have high liquidity, which means they have high trading volumes and volatility, which creates multiple trading opportunities. In addition to the majors, you also have the option to trade cross-currency pairs. Crosses do not contain the US dollar as a currency, but contain other major currencies. An example of this is the Euro Swiss franc, Euro Swissy. Finally, we have the exotics. These are pairs that have one major currency and another that is from an emerging market, such as the Singapore dollar or South African rand. When you start trading, you will start to come to know the pairs by their nicknames. The sterling US dollar is commonly referred to as the cable. The Aussie dollar US dollar is called the Aussie, and the New Zealand dollar US dollar the Kiwi, to name a few. Now that you understand what a pair is,